Welcome to today's edition of the London Session Open. Today is October 1st, 2018, and my name is Alejandro Zambrano, Chief Market Analyst with Trade Captain and Amana Financial. Let's take a look at the markets. Before we start, I hope you have downloaded our new Forex ebook. It's a book that's written here by the team in-house and a work led by myself. So make sure you download it. It's free to download. It provides, obviously, if you've been trading for a few years, say more than 5 years, probably it's not gonna, change things in a material way. But anyone that has maybe less than that experience could definitely pick something up. So make sure you download it. It's free to download. You just need to put your first name, last name, phone, and email. And then you're ready to download it. If you have ignored that pop-up, then it's down here, Basic to Advanced Forex ebook. Push forward, just click here to read out, and you download it. Alternatively, it should be under News and Special Reports. Okay, so we're gonna take a look at the markets. I hope you guys had a good weekend. I had one, quite relaxing. With my family, and I'm now ready to trade the markets. In fact, I'm already holding a few positions that are looking quite good already, and we're going to talk more about that in a few minutes. Now, before we start, as always, bear in mind you have this little risk disclaimer here in the bottom. It says that Forex and CFDs carry a high degree of risk and may expose you to significant losses. That's all true. About 79% of traders or so in Europe lose when they trade. And the number one reason for this is primarily just because they trade with too much leverage. And then number two, they don't really have any sort of trading strategy. They just buy it because someone tells them, or they read online or saw something on YouTube. It's difficult to make any money without any sort of strategy or some sort of system. Okay, we're going to begin with the euro, as we usually do. And the euro is, declined quite strongly already on the 24th of September and then on the 28th of September. And the reason here is just because of the situation in Italy. And that, obviously, first we needed to go down, or not that we needed to go down, but we did trade lower. And then you have a situation in Italy. I did share a few updates on that. If you go all the way down and then you click on TC Authors, then you find my content here, and you can scroll through here as well. But you can see this one on Italian government bond yields, and this is the Italian stock market. And here's just the Italian stock markets. On Friday, you had a quite significant decline this day here, and there was about a 4% loss. And technically, the trend is bearish below the September high, so we could potentially take out the August low. And if we take out the August low, you'll probably see more weakness directly in the euro on the back of that, and the market could potentially decline to the April 2017 low. As well, I did an update on the Italian government bond yield, and this is another key market. So most interest rates are close to their 2018 high, so this is nothing strange. The US 10-year yield is something we've been looking at, and at that time we said, the yield is at 3%. And we said that it's going upwards, it's supporting the dollar yen, when we bullish the dollar yen and risk on stock markets and so on. So here as well, we're very close. But what's interesting here is that this has an interesting pattern. This is an ascending triangle pattern with with a horizontal resistance level like this. And if we trade and close above the August 30th high of 326, then this projects that we can rally up to 409. Now, 4% is not that bad, but look at it from this perspective. And I mean, 4% is not that bad. That's something that is manageable. Last time we had the major Eurozone crisis, and the 10-year government bond yield in Italy traded up to 7%, 7.3 or so. So that is when it starts to become critical, because at one point, if the interest rate becomes too high, then you just end up paying back interest rates, and you can never really pay back the principal. And if you don't pay back the principal, you're never gonna get out of debt. So it's important that interest rates remain low. But if we would go up to 409, it wouldn't necessarily break the Italian government. but it would definitely spook the markets, and it also depends on sort of the pace this goes up with, because if it goes up dramatically and very fast, then I think that could scare the markets. Now, that could influence the euro, and that could potentially push the euro lower. But technically here in this market, because it is the way it is, in other words, we're dealing with a sideways market, we don't really have too much. There's no real good trading idea in this market right now. I think on Friday I told you guys that if we were trading pretty much here, I think, and I said if we would go to the upside, then we could potentially sell for this to go lower. But now we're already so close to the lower end of this range, so I wouldn't really do anything here right now. I think it's going to remain choppy. It could be at 117, it could be at 115. Obviously, with the situation in Italy, probably it's going to be closer to 115. But it's always about residual ratios, and they don't really exist here. A better market to trade, which I talked with you guys last week, because when we sell the euro dollar, we're buying dollars and we're selling euros. So obviously you can sell euros in other markets as well, or you can just say, I just want to buy dollars. And if you look at just buy dollars, then as we said last week, the break to gold at 1187 could take price lower, and it did take price lower. And then on Friday we had a natural correction level, and now we're back lower again, back into profit. And I'm bearish myself with a stop just above the high here on the 27th, which is Thursday highs. And you know, it might trade below it today, I hope so. If not, it might trade below it tomorrow. But when it takes out last week's low, I'll probably reduce my stop loss to the high seen on Friday. And by doing so, I would have reduced my stop loss a little bit, and then as things go lower and lower, I can hopefully reduce it even more. I'm targeting the August low here. It's a rectangle pattern breakout. So this is a rectangle pattern. Difference between the low and the upper end here provides you the target, and that suggests we can trade down to the August low. And then we'll see. We'll see if it takes out the August low, it could potentially go down to 1123. Dollar yen, we talked about this quite some time, guys, and we just reached that head and shoulders pattern that I talked about, where I said a break to 1183 would activate a head and shoulders pattern. This is the head, right shoulder, and I guess this will be the left shoulder. And we had the break here, and I said on the break here we could probably head upwards to 114, and we're at 114 right now. So this will be a good little spot to book profits. That's what I think, at least. If you want to book profits or not, it's up to you. But I think it's a good spot. In fact, I would have booked 50% of the position already here, and then probably the rest here. Also on Friday, I said, or over the last few days, I've been saying that if we trade up on this bullish breakout here on a corrective move, it makes sense to go long. If not, it doesn't make sense. I'm sorry, guys. If you didn't buy down here or anywhere in the middle, we're just way too, the residual ratio is way too bad. So I think this can go up, and guys, there's gonna be a lot of people writing about this big triangle. So this is big triangle that we look to leave now behind, but and I do think it's worthwhile working with, but we need to take out 114.53. So we need to take that out. I remember, in fact, a few months ago, this triangle, which is like this now, crossing this high and this high, was down here. So this was the first occasion. So when we were up here, and I actually bought the breakout here myself for the move to the upside, and I got out about 113. I got out here, but I remember people were telling me, "Well, Alex, it's gonna rally much higher for that because of that triangle breakout level," and but it didn't. And the risk-reward ratio here was not good. The same way as the risk-reward ratio for new long positions up here is not good either. So this is not a spot to go long, it's a spot to book profits. And when I looked at this last time, you know, it's very straightforward. There's so many highs here we needed to take out last time, and that did not work out. And I don't really think it's gonna work out this time either. It might work out, but you have high here from May 2017, July, and then you have October 2017. And then This is the 2018 high. Actually, we're already above that one. But these levels here are crucial. It might go upwards and then potentially lower, and it's on that corrective move that I would prefer to work with this market. So this is the daily chart, and above 112.55, then yeah, I think it makes sense to potentially remain bullish, and we can go down a bit, and then potentially one could look to buy here. Next market we're going to cover is US oil. So this is US oil, and I still haven't received any thank you letters. Nothing. Just joking. I'm up myself with about 2% on a new position, and I made about 2% as well on the initial breakout, which I traded in Brent Crude. But we had the break to the upside here that we talked about. The idea was to be bullish, and then you have that correction move, and then upwards. And yeah, it's a good opportunity here. I mean, it's looking really good for us. I think it's possible to reduce the stop loss, and I think it can go down maybe to 72.65. But as long as you don't really trade much lower than 71.39, there's no really worry. So we can reduce the stop loss here, but keep an eye maybe on Friday's low. I wouldn't get worried. You know, if we trade below Friday's low, then that's a bit of a warning sign. But I think maybe a little bit lower, then potentially upwards. And up here, it could potentially be possible to book maybe 50% of the profit, and then maybe keep it for the actual targets. So we have this big triangle, which we breached here, and that's that target. You have a head and shoulders, which is head, left, right shoulder, and that gives you this level here. But there's nothing wrong, you know, this is a nice move we had here, and this is about 4.6% return. So booking 50% of profits here, and then just managing the stop losses all the way to the upside, and then try to book the rest at 76 or maybe 78 at the actual target. That would probably be a good idea. In regards to those thank you letters, I actually remember when I used to work for another broker, we had an office in France, and one of the analysts there had some very good trade ideas, and one of his clients actually sent him bottles of champagne to thank him for the good ideas. I don't expect a bottle of champagne, but if you can, don't forget to click on the like button here. And if you want to, I don't actually drink champagne, but I wouldn't say no. All right, let's move on here. S&P. Now this is on fire, guys. We talked about buying down here. S&P is one of the main markets that made a good contribution to my returns for this year. This year I'm up with about 55%. Now here, it was a difficult situation on Friday last week, Wednesday was it, yeah. So obviously we talked about buying here. This was sort of the loss setup I shared with you guys. And I said, you know, look, allowed to go up, which it did go. And then, you know, just reduce the stop loss. There's nothing wrong with doing so. And I would have reduced it here if I was long this market. But I was long the Japanese stock market. So I didn't trade this one directly. And then we unfortunately would have been stopped out here, but we never really traded below that trend defining level that is important for this pattern. And then we bottomed down nicely here. So we took out, stopped creating lower and lower highs, and here, I mean, I wouldn't be buying here right now. This would be a risk of 1%. I do think we can go upwards. I mean, we can go up with another almost 1%. And in the long run, if we treat this as a triangle, then we have a target of 3,019. So I think we can definitely head upwards. But as always, if the risk to reward ratio is not there, then I don't want to be buying it. So I think if it goes down to maybe in 29, 21, then yeah, that's fine. And maybe from here potentially be bullish. Just as well here, this is just the NASDAQ, something I've been bullish on, suggesting that we could bottom out here at 7,500. We just spiked to a new all-time high, and again, I think this can go upwards. I don't remember having an actual long-term target for this market. This is a trickier one. This could be, there's a pattern called a failed head and shoulders pattern. I'm not sure this is actually a head and shoulders though. We can probably just treat this as some sort of a triangle. This is 1, 2, 3, 4. Sorry, 1, 2, 3, 4. We're just gonna go with the middle here. See if this makes sense. Yeah, we're almost pretty much at these targets. 77.60. I think we'll take this out, and I think we'll head higher. But if one is long on the back of, say, looking to buy here, then probably booking all of the profit, or at least 50%, would be probably a very good idea. German DAX, is it up? Is it down? What's going on? Well, it's up. Still a tricky market to trade. I don't really want to get involved here. Still dealing with a bit of a downtrend. But as I said, when and if we take out this high, we could potentially start to turn bullish again. Because it could be take out this high and then we'll push upwards. And this could even be interpreted like an inverse head and shoulders. Head, left, right shoulder, which would provide this target of about 5.3% move, which would take us back up to these levels here. I wouldn't be that enthusiastic, and it's not necessarily such a good target, such a good pattern, this one. The head and shoulders pattern is good, but just the way everything else looks like, it's not necessarily a perfect pattern, but clearly take this up and then probably head a little bit higher. If we reach 12,894, then that would not surprise me at all. Finally, cryptos. Bitcoin, what's going on here? There's not much happening at all. Still capped by that September 22nd high. And I think if we take out the high, probably upwards, take out the low, downwards, okay? Very straightforward. And yeah, that's it. Ripple at 57 had that massive move to the upside. And I mean, I was looking across many of the other coins and I'm starting to see some signs of stabilization. And these markets have been in a bear market for about 10 months now. And at one point we'll probably stabilize. And we're starting to, I wouldn't call it just yet that we have stabilized, but we're starting to see like this. This is like Litecoin. Litecoin, you see decline upwards, downwards, then hasn't really managed to trade much lower or higher. And as always, I'm tracking these lows, sorry, these highs. And you know, if we take out this high, we could potentially head upwards. And there's other, this is EOS. EOS is stuck in a triangle. It could technically just decline with 31% like that, but it could also potentially rally upwards like this. So there's many different interpretations here. So we're starting to see some interesting setups. And this is just two random markers I clicked on. If you look at all the big space, so this is what I do if you're trading cryptos, you look at all the top 10 coins. If you see one or two coins starting to move, then that could hint about what's going to happen in the other ones. In fact, it always usually is like this. I remember EOS literally traded much higher here in April. So 11th of April, bottomed out on the March, and then on the 11th of April, moved upwards. And then you start to see, if I remember correctly, here's the 11th of April. So we had that, or 12th, which day is this? Yeah, 12th of April. So literally one day later, you saw that push here, and you had the little push. And it doesn't look like much, but it was 27% move. And then Ethereum on the 12th as well. This was a very nice setup, because you can see here how we're stuck in a very narrow range. And here you get the breakout on the 11th. So technically it would be perfectly fine to buy here. Stop loss probably just below here, so 10% risk. And then this market at the end rallied about 100%. So that's 10 times your risk reward ratio, guys, in 49 days. Sorry, I think it's less. 24 days. So that's awesome. And so that's what I look at. I look at everything, and then I just start to see, you know, where things start to narrow down and signs of sort of the market looking to trade upwards. Good morning, Maurizio. I hope you're doing well. And then we have a question here from Federadi. Good morning. Does it make sense to me to buy the lower boundary of the euro dollar range around 115.30, 115.30 or 60? No, it doesn't, because I like to trade trends. So trading the euro would be a range bound setup. The idea is to buy here and for it to go to the upside. But I don't really like that sort of markets, and they tend to be sluggish. I mean, of course, say you bought here on September 4th, it goes to your advantage, and then a few days later it's back again challenging the lows, 6 days later to be exact. And don't really like that too much. I can tell you what I like. So just up until recently, I traded the Japanese stock market. So I like this big time. Okay, this is the Japanese stock markets. You see here, trading sideways from May up until September. And this was a head and shoulders. This is a head, left, right shoulder. And I was looking at it here. I didn't buy here. I did buy here though. So I bought here. And then, sorry, the breakout was on the 14th. But I didn't actually buy on the 14th. I missed out. So here, and then the market moved upwards. And then it closed here at 23,169. So I bought here with a stop loss down here at 22,934, something like that. And then I held it, and this whole market, I got out with about 50% here, around 24,000, and then here, I think it was on the 28th, something like that. I got out pretty much at the 2018 high. Of course, if I would have kept it, would have even been better, because this was my initial target, because that's the head and shoulders target. Look, difference between the head and the neckline is pretty much up here, more or less. So this is what I like. Buy, and then the whole thing just goes into profit. Earlier this year as well, I traded copper, which is a good idea, This is copper, and I traded this as well. So here you have a big rectangle like that. And this is 11% decline, quite dramatic, and I'm quite confident I actually put an article about this. Let's see if I did that. Look at this. In July 2nd, copper might slide by 12.84% on a break to the 2018 lows. This is July 2nd. Look at this. This is copper. This is the former 2018 low at 293. And I said we could go down to, it's difficult to see, but about 12% decline. I said the market could decline. Yeah, 255. We're now all the way down to 255. 255 3. So 255.3. So this was the break. And you see, this is a 12% decline. And this is good money. This is not euro dollar bouncing up at 1% to 2%. Now, am I like tough enough to hold a position for the whole move all the way down? No, I am not. But the market, I sold here with a very tight stop loss on the other side. and the market moved on this section here, and I got out here. And then I don't remember actually trading this section here, but I traded more metals this year. I traded silver, I traded platinum as well. So I did a combination of metals trade this year, because silver as well, if I remember, had a crazy decline, or very good pattern. So you see here as well, you have this sort of move like that. So I had the break here, and I don't think I traded this one, but I do remember, I think it was the break here to 15.22. So, and then it went lower. And all these markets are very highly correlated. So this break happened on August 10th and August 14th. And this was August 14th and then August 15th. So it doesn't really necessarily align perfectly, but in the back of my mind, you know, I'm trading silver, and I have this long-term bearish view on copper, and I think it was platinum as well. You see here, this break here. So I have all that in the back of my mind, and it's in essence, I can choose. It's not that I'm choosing, but I know that, okay, very confident to short sell silver, just because I know that copper is bearish. I know that platinum is bearish as well. So I work a lot with correlations. Now in the case of the euro, the last time I traded it, and I'm not kidding you, it was here on August 10th. So the market had been trading sideways for this. Actually, that's not the last time I'm trading it. That's wrong. But here I sold for this decline like that. And then here on the 20th, I bought, and I had terrible entries because I should have put limit orders on, but I didn't. I should have bought at 17.47 or so, but I was looking at price and I bought at 66, so 17.66. And I think literally one day later I bought again, and pretty much at 66 to the same level. And then the market rallied upwards, and then it moved down again, which was a bit worrying. And then it was stable like this. And because I knew the Federal Reserve or Fed Day was coming up, I didn't want to hold a position heading into Fed Day where the profit was coming and going in profit. I have no issues buying things and holding them over Fed days and ECB days if I have a bit of a buffer. So if I'm long and I'm up with say 100 pip, 50 at least, but 100 say, then I know that if ECB's or the Fed does something that hurts my position, I might lose. The whole market might move against me, maybe 150 pip. But if I'm already up with 100, then I'm only going to give up 50. But I don't like to hold positions where I'm pretty much break even, because if they do something that affects my position in a negative way, I will lose out on that, and I don't want that. So, and I can lose out very quickly, 150 pip or so, which I don't want to. And that's why I'm not buying this. But when and if we take out the high, I might look to get involved, and when and if we take out the low, I might work with that. And that's why I'm actually trading gold, because we're trading in this little section here. And as you might remember, a few months ago when the market was stuck here, I said if we take out this level here, we're probably going to go to this low, and the market delivered on that as well. So that's why I wouldn't be buying the dip in the euro. Okay, very long explanation, guys. I hope you enjoy that. Don't forget to like the video. Very straightforward, just click on it and then click here as well. In the very top as well, you do have these different Twitter feeds. You have my own Twitter feed at AlexFX00, and then you have the Trade Captain one. I suggest you follow both. On Trade Captain, you see updates from my colleagues. That will be Yuri, Nathan, and Harris. So it's good to follow them, just because you can get some good input on what's going on in the market and interesting charts. And then you have mine as well, where I publish my stuff plus other stuff as well that I like online. So got a question from Aldo, Russia, Kremlin, question mark. Question mark, yeah. Not really sure what you mean by that. Guys, have a good day, and I'll see you guys tomorrow. Thanks. Oh yes, I understand what you mean now. About the images, yeah, I just choose random images like for these webinars. There's nothing. Sometimes it's linked, like this is crude oil, and of course if we talk about Japan, we'll do that. And the Russian ruble has been quite hot actually lately, so we have done a few webinars about the Russian ruble. Not webinar, but talked about it. So I think this was one of those images that has been sticking around. Okay guys, have a good day, and I'll see you guys tomorrow about 9 a.m. London time. Thanks.